Hello and welcome back to this week's episode of Uncontested Investing. Today, joining me is me, myself, and I. That's right, we're going to switch it up a little bit. We have a Q&A episode planned for you guys. As of September, there was a little bit of breaking news in the industry. We got some questions from LinkedIn, Instagram, so we figured it'd be a good idea to jump on here, get some questions answered for investors as they look to take advantage of a bit of a changing market in 2025. I'm excited to get into this. I think we have a great variety of questions, so I appreciate everybody that sent in a question. I'm looking forward to getting this started, so let's get underway with the first question. So for the basis of this episode, really what we want to talk about is the change in the economy from the Federal Reserve. In September, earlier this year, they finally slashed rates. So what we're going to talk about is what that means for you as an investor, right? There's a lot of things to consider when the market changes. The first question that came in is from Kevin from Connecticut. Has there been any recent movement in the market or economy that would dictate rates dropping in 2025? Again, that's kind of why we're here today, right? To talk you through that, strategies, options you may have, people you may want to work with. So I think this is a great place to start. But again, as I mentioned, in September, by a half of percent or 50 basis points, the Federal Reserve decided to cut interest rates. The two goals they looked at were restoring pricing stability and a return to job fluctuation. They saw the jobs come back in at a reasonable rate within the market. So that gave them the confidence to slash, again, interest rates by 50 basis points. Now, what this is going to mean is interest rates will drop to around 5%, as low as they've been in quite some time. It's been a few years since we've seen rates at 5% or lower. So a lot of investors, their ears perk up when they hear that. They're ready to get back into the industry. Maybe they took some time off when rates got a little bit too high. It scared a few people away from taking this seriously as they did maybe in 2020 or 2021, which we will talk about, Ray. I think people that were in the industry throughout the course of the last 5 years can certainly remember what it was like, even during COVID into 2021, people were having a field day, right? That simmered down a little bit throughout the latter stages of 2022 and into 2023, but we can expect some uptick in activity, right? And although this is always seen as a positive, everybody wants lower interest rates. What this means for you as an investor is there is going to be some more competition. You're going to be battling people for properties now. There's going to be some bidding wars. So there's a lot to consider. We're going to get into all that, right? Overall, this is a positive, but there are more things to consider, different ways to handle certain situations, different properties, different strategies. So there's some more great questions here that will get into all of that. The second question that came in is, what is a strategy that an investor should employ in a busier, more competitive market? Right away, what my mind goes to is bringing in somebody into your business, someone that you can partner with that will take this just as serious as you, the investor, but doing it in a way where they can take something off your plate so you can be a little bit more savvy, a little bit more aggressive within the industry, right? You want to be able to put that bid down on a property, know that there's funding ready and available for you. There's a lot of things that investors are juggling, right? Sometimes it's securing a new property. Sometimes it's taking care of a property that's already in their portfolio. So there are a lot of moving parts. And when you have to move a lot quicker, it's better to be able to delegate, right? Have people in your contact book working with you, not for you, to really be achieving the same goal. And what my mind always goes to is working with a mortgage broker within the industry. This is going to take so much off the plate of an investor. They're going to have so much more time that they can spend wisely. Again, as we mentioned, securing those properties in a more competitive market. What a broker can do for you is be the middleman between you and the lender that you're looking to secure the funds from. There's a lot of paperwork that goes into this. There's a lot of back and forth, whether it's emails, phone calls, days, even weeks can be taken up by this loan closing process. If you have a broker that you trust, that you work with, this can take away a lot of that extra work. And when I emphasize working with someone, what it will do for you if you have a broker that's on the same page as you, they're going to be earning commission from loans that you close. There's no secret to that. But if they're working with you, that means that they're more motivated. They're on the same page as you. You guys are working together, not against each other, right? Being on that same page, having that synergy is only going to help you as an investor, right? That's when you start closing properties much more quicker. The broker is going to be able to take care of those conversations with a loan officer, with a lender, collect those documents. Once they have those documents from you, they know where to find them. They're not bugging you with extra questions, again, wasting time when time is of the essence. There is another way to look at this, though. If you as an investor love those conversations, right? You like crunching the numbers. You like negotiating deals on your behalf. Another industry professional worth looking into could be a property manager, somebody that's going to take care of the day-to-day tasks that go on within properties within your portfolio. And then you can be having those conversations with a lender, with a loan officer. So there's two ways to look at it, right? It's, do you like crunching those numbers, the document collection, being able to be extremely organized, or are you an investor that's more invested in the day-to-day tasks, right? Making sure everything's okay at a property. If something comes up with a tenant, are you going to be the one to handle that, or do you want a property management? So delegation is the key strategy here, so you can be more aggressive. It's just going to be what works best for you as the investor. Which path of delegation do you want to take? This next question comes in from John from New York. John, thank you for the question. Assuming more inventory is becoming available and lower interest rates kickstart bidding wars, is there a specific property type that investors should be looking at? Again, this is another very good question. I'm glad it's asked, because a lot of times investors can get that one-track mind. They can kind of narrow their focus and only go after one property type. While this is a good strategy for people that are newer in the industry, you want to be able to stabilize your focus on one property type, get that down, and then broaden your horizons from there. But for investors that have already seen and done a lot of different property types, this is the type of environment from an economy standpoint where you really want to start diversifying your portfolio. You want to go after as many different property types as you can. The list that comes to mind for me, right, is single-family rentals, multifamilies, commercial properties or mixed use. You have vacation rentals. You even have fix and flips and ground-up construction. So that's pretty much running the gamut, right? I'm not saying you need to do all of those, but it is important to know the options that are available. You really want to make sure that this is the time you're diversifying your portfolio, right? With interest rates being lower, a lot more inventory is going to be coming onto the market now. So your options are a little bit more broad. What this will do for you in this environment, right, is you can secure these different types of properties, get experience under your belt. And I hate to break the bad news. I know we just started this conversation talking about how interest rates became lower. Activity is going to start picking up, all good things for investors. As you can see, within the last 5 years, this is a very cyclical industry. So there is going to be a time again. I'm not going to try to predict the future here by giving, an exact date, a number of years. But as we can see through historical data, the industry will experience another rise in interest rates, right? This isn't going to last forever. So what happens when that market tightens up again is certain property types get phased out of the market. They either become no longer available, they become less profitable, they become harder to secure. So with diversifying your portfolio, now you have a lot of different options. Depending on which way the market turns, you can then switch your focus to that certain property type, because during a period of economic ease or a little bit easier to get different types of properties, now you have that experience. Now you have that confidence to go after those property types. And if you get them into your portfolio, certain properties are going to survive different markets a little bit differently. So now you have a wealth of different properties within your portfolio that are sustainable depending on the market, right? So you're really covering all your bases. And when the market opens up, that's when it's the time to secure those properties. One thing I do want to mention, though, about the commercial side of things, the commercial properties that you're looking to get, your retail stores, your mixed-use properties, your restaurants, your gas stations, so many commercial properties come to mind that really intrigue investors. But one thing I do want to talk about is seriously taking a look at mixed-use properties. These are important because the commercial side of real estate fluctuates a lot more than the residential side. So if you have a mixed-use property where you're gaining cash flow from residential tenants, while maybe a commercial side of things sees a dip, a company goes out of business, they want to downsize, they want to upgrade, whatever that case may be, those commercial tenants aren't going to last forever. So if you have, say, a retail store or an office space, those are the things on the commercial side that, really have that longevity, or they're easy to replace, right? If you have a very specific type of commercial building within your portfolio and that goes out of business, that's really going to leave an investor vulnerable. So hedging against that is a really important thing to remember. The next question that was submitted is a good one that I kind of mentioned we would touch on a little bit earlier in the episode. What has changed since the last time the market saw a spike in participation, competition, such as we saw in 2020 and 2021? Although it only seems like a few years ago, AI and analytics have made leaps and bounds since 2020 and 2021. AI is something that all investors should be taking advantage of. Technology can be one of your best friends in this industry, right? As we talked about earlier, working with other people, AI can be an extension of that. It can actually, increase your productivity and help in so many different ways, whether that's, scheduling virtual tours, sending out blogs or letters, creating content, so to speak, if that's, in the form of a letter of a potential tenant, a potential partner, things like that. Or, AI can even help you optimize and calculate rental reports so you know what to charge at certain investment properties that you own. So this can be a huge, huge help and something that all investors should be taking advantage of. Another layer of AI is going to be analytics specifically. So you have things like reports, industry metrics, trends in the economy. All these things, analytics can run reports for you in seconds, minutes. And again, they're giving investors to-the-minute data that they can actually use to help them make smarter decisions, help them make more money. So the combination of AI and analytics is something that all investors should be taking advantage of in 2024. I promise you, this is something that takes your business to the next level. We hear a lot about it on Uncontested Investing in previous episodes. We have guests that specialize in this field that come on and give advice about AI, how to handle it, what to utilize it for, and specifically what it can do for an investor. All things that I kind of just laid out over the last few minutes of this answer. One of the things that I do want to hedge against, though, as we can see this conversation, there are a lot of pros here, but there are cons as well. So it's important to get all the information, consider all the factors, and then make the decision that works best for you as the investor. But when you're talking about utilizing AI, maybe even things that are proprietary to you, your business, when it comes to analytics, just be careful who you're trusting your information with. There are so many companies out there that do this the right way, that have your best interests at heart and in mind, and will help your business grow. That's not every company, though. You're going to want to do research. Make sure you know who is getting the data, where it's being stored, and most importantly, who has access to it, right? With AI, there has been an increase in fraud and theft. So these are the negatives. Unfortunately, there are a lot of positives, but there are negatives to consider. So when you're vetting a company, just do it very thoroughly and make sure you know the answer to all those questions. And then from there, you can have a little bit of peace of mind that AI is going to be working for you and it's going to do nothing but help your business prosper. The next question that came in is one of my favorite topics. It usually comes up in episodes of Uncontested Investing, but as it pertains to this newer market period that we're entering in the latter stages of 2024 and into 2025, this question is very relevant and one that I did want to touch on. Is it still worth spending time on networking or attending events during a time of competitiveness in the industry? Or is it better to lock in on transactions and lead generation? Investing in real estate is and always will be a long game. So for me personally, I'm never going to advise against attending trade shows or being able to network because it can always change an investor's business, right? It always doesn't happen at the snap of a finger within one conversation. But what networking and attending these types of events can do for you is lay a foundation that leads to success in a few months, a few years, and for people that are taking this seriously throughout the rest of their career, right? A lot of people come into investing with a few goals in mind. Obviously, it's a lucrative opportunity from a business standpoint if you can maneuver the economy and certain investments successfully. But a common theme that we always hear is people want to leave something for the next generation, right? Their family, their grandchildren. These investment opportunities, these properties get passed down from family to family. And what it can do is set up generational wealth. So when you're talking about networking and trade shows and wondering if it's worth it, those opportunities are what can lead to that, right? You're meeting new people, you're meeting new businesses. These can all lead to success 5, 10, 15, 20 years down the road. So you never know who you're going to meet. You never know who you could partner up with. As I mentioned, there's companies and services that can make your life easier. And I think one of the best things to do, right, if you're worried about that time cost analysis, whether it's better to look at properties or, work on the business at a networking event, one of the best places to start is at a local REIA, whether you've joined one, considering joining one, or you're already a part of one and you want to just stay locked in at that local REIA, which is a real estate investor association. This is a great place to start. One of the reasons I want to talk about this, right, is the local aspect of it. So you're not traveling across the country. You're not wasting your days in airports, right? A lot of people, get that anxiety when they're away from the business for too long, or they're not able to access a computer, talk through a deal, progress through a deal. It seems like a day wasted if you're spending it traveling. But at a local REIA, these are 2-hour meetings, 3-hour meetings at max. And again, you never know who you're going to meet. Every time you go to these, you can learn something new. You can meet a new connection. And the list goes on when you're talking about people that are at these events, right? It's your general contractors, people that you could partner with, people that could even mentor you. Maybe it's somebody that's dominated this local market or been through the tough times, been through the competitive times. There's even employees at lenders, right? If you're looking for alternative financing, so many people at these meetings are speaking up. Obviously, it's a bit of a sales pitch, but at the end of the day, what they're trying to do is open your mind, educate you to a different way to do business, and maybe that way is perfect for you. So a local REIA is a great place to start, again, from a time commitment perspective, and people that are in your local market that have been through different economies, different situations, different property types. So if at all you're worried about the extent to traveling and networking and all those types of things, local REIAs are the best place to start. I also do want to talk about trade shows because I think they are important as well. Yes, the local REIAs are much more convenient for an investor, but trade shows are where you can really take your business to the next level. So it all depends on where you are in your journey, where you want to get to. Are you currently in a successful real estate business and you're kind of happy where you are and the local REIAs are going to be enough for you? But when you're talking about national trade shows, right, these events, first of all, are usually held in investment hotspots around the country. You're talking about, Florida, Texas, California, Arizona. As somebody who's traveled to all those states over the past couple of years for these events, it can be worthwhile to take that trip. Are you thinking about expanding? Do you want to invest in these hotter markets where, your potential return on investment can increase by 5, 10, 20% rather than your local market where, yes, you're making money, but it's at a much slower pace than it could be if you start thinking nationally, investing nationally. So 2 things happen here, right? 1, you're meeting investors in that area that are experts that can help you. So it's a potential partnership opportunity. And then 2, you can use your time wisely, not only attending the trade show, but also looking at properties in that area. Look up local listings, go to properties. What are people charging for them? How quickly are they going off the market or how long are they staying on the market? That can really help you gauge how aggressive you have to be if you're going to expand into a different market, right? So not every market may be for you, but it's a good way to vet that current market. You're not just stuck in a hotel at that trade show. You're actually performing research that can help you make an informed decision based on, again, the metrics that I discussed. Does this move make sense for you? Additionally, not all trade shows are created equal. You really got to have to do your research on this. Make sure that the trade show makes sense for your goals as they currently stand, and maybe your goals as it pertains to your future as an investor. Not all trade shows are created equal, service the same type of industry professionals. So knowing which one to attend versus which ones you can skip is a big part of that. And it goes back to the time management, right? Maybe using your time wisely, going to 1 or 2 events a year. Maybe if you pick California or Arizona because you're interested in investing in those states, Florida, Texas, same thing, right? So you can pick and choose your battles, manage your time wisely. But at the end of the day, as you can see, I'm very passionate about the networking and trade show aspect that this industry can offer. And it's something that you never want to leave on the table. Yes, it is important to buckle down in competitive markets and be a little bit smarter about your time, but never leave those opportunities off the table. Another question that came in is from Jess from Connecticut. What are some industry-related services that investors can utilize that will take some work off their plate to focus on more competitive markets? We touched on this a little bit earlier, but I think this question is important too, right? The strategy of partnering with a broker is a little bit different from industry-related services that can really help you. There are so many to name. It all are of equal importance in my opinion. So if you'll bear with me, I'm going to run down a list here. We have property insurance, business entity and tax prep, local investor associations, which we talked about earlier, lead generation platforms and software, loan management systems, appraisal management services, and legal counsel. So it's important to consider all of those, right? Because if you notice, all of these factors come into play at different parts of the loan process. Some of them are before you even find a property to invest in. Some of them help immensely during the loan process. And then post-closing, there's a lot that goes into the legal counsel. The list goes on, right, of things that you need to consider at all different stages of the loan process. One thing that all successful investors have in common is they cover all their bases. There's no stone left unturned. There are so many things to consider. So for you to be successful, really look into these services. They don't have to happen all at once, right? There is a cost that comes into play when you're employing these different services. So maybe figure out where you need the most help and dial in on that specific service at that specific time. And then as you grow, you're able to afford more and more of these services. And then, really it is worth it at a certain point to utilize all these different aspects of the loan industry. They can only help you grow exponentially. But again, you have your property insurance, your business entity and tax prep, your local investor associations, the lead gen, the loan management systems, appraisals, and legal counsel. All of these factors matter, whether you do them one or a couple at a time. You're definitely going to want to look into these as the investor. They're going to change your career. I love this next question. I had to add it in here. The tables have turned on me. Our listeners have reached out and asked if I had one of our segments. So as you know, every episode of Uncontested Investing, we have our Money Making Minute and we have our Deal Breaker, Deal Maker. Do I have one to share? We recently reworked this segment, the Deal Breaker, Deal Maker. So for this one, it's very personal to me, and I'd be happy to share this story again. I know people that saw the first few episodes, the episode where Tim actually did the handoff as host to me as Uncontested Investing. This is something that I have touched on, but for me, the Deal Breaker, Deal Maker of the low point in my career or the turning point in my career was that I actually was laid off during COVID. My previous job was at a ticket selling company for live events. So as you can imagine, during COVID, when all of that shut down, the inventory was going nowhere. The business became stagnant. There were rounds of layoffs, and eventually it was my time, and I was laid off towards the latter stages of 2020. It's not a feeling I wish on anybody. The anxiety that comes into play, so many things to consider, starting to worry about. COVID blindsided so many people, and there was a sense of defeat there. Even though the situation was somewhat out of my control, it wasn't a good feeling. It was a low place. One of the best gestures from a professional standpoint that ever happened to me was the manager that actually laid me off on my way out sent me a job posting for a company, RCN Capital, business development associate. He thought I'd be great for the role. So again, that's something that I think about to this day. I applied for the role after a few rounds of interviews, and luckily for me, it was only a month of unemployment. But for people, I don't mean to laugh, but there's people out there that were in my shoes, and when you're in those situations, a month starts to feel like a year. Your world kind of comes crashing in when you take for granted a paycheck that comes on time every 2 weeks, and that suddenly disappears, right? Bills become unmanageable. A lot of things start going through your brain. So being able to only take a month off of work, find a new role at RCN Capital, and then fast forward to 4 years later with the company, I'm now hosting the Uncontested Investing podcast. So it certainly has been a full circle situation. You really do have to experience some lows to appreciate the highs of your professional career, your personal life, whatever the case may be. So that is my deal breaker, deal maker. And I hope that story helps some people that may be experiencing unemployment, different, low periods throughout their life. It does happen to everybody. And there's always going to be a light at the end of the tunnel. Just keep working, keep striving, keep trying to improve every day. You never know when that next opportunity or your big break is going to come along. So I'm happy to share that with you. The next question that was submitted was for someone that is new to real estate and think about getting into the industry during this competitive market, what types of investments are a good place to start? The one phrase that comes to mind for this question is going to be cookie cutter. In the industry, we have something called a cookie cutter fix and flip investment. So I want these newer investors to really focus in on minor fix and flips, properties that need, a fresh paint job on the living room walls, kitchen walls, right? Updating appliances in the kitchen, refinishing a bathroom or a basement. These can be minor adjustments, minor renovations that can really turn around a property and give you some profit that you're looking for to kickstart your career. With these types of renovations, the biggest thing here is a motivated investor can go on YouTube and figure these out for themselves. Yes, hiring a general contractor is always something that I would recommend. But if you're looking to minimize costs and maximize profits on your first couple real estate transactions, these smaller fix and flip investments, you're in, you're out. You don't have to worry about managing a property, finding tenants, calculating rent rolls, all those things that come along with 30 or long-term rentals. It's a little bit more to handle rather than your fix and flip investments. So starting there is really the best place to start. A good thing that I would mention as well is when you have these smaller projects, the margins are smaller, there's more room for error, and an initial mistake on your first or second fix and flip isn't going to derail an investor to the point where they're financially taken out of the space, right? If you try to bite off more than you can chew on those first few deals, it can be overwhelming. And then before you know it, you can be in the hole for, the numbers get pretty staggering, $50,000, $100,000, right? And at that point, you're phased out of the market, you're discouraged. So many things come into play when you make mistakes on these bigger property types and these bigger renovation projects. Once you're able to get those first few under your belt, you're going to earn profit that's substantial. And then you go after those bigger fix and flips. You can then go into different markets. You can target 30-year rentals at a more expensive clip. And then in turn, you're charging more for rent. So you're seeing a quicker return on investment from the rental side of things. But make sure that you get your feet underneath you when you're entering this industry. There's so many success stories that all have one thing in common. They started small, they gained experience, they had that longevity, and then 5, 10, 15 years down the road, now they are a real estate tycoon, right? That just doesn't happen the first time somebody gets into the industry. You have to work at it, and let me tell you that I've heard so many different stories, people sitting across from me, getting interviewed. People have taken some lumps. So those downturns are going to be out there, but you can certainly minimize the damage if you go after those cookie cutter fix and flips, something that's a little bit of a slam dunk, so to speak, something that's easier to maneuver. And then from there, it's all about expanding, getting that experience and confidence, and your portfolio just grows naturally from there. The last question that I want to touch on for our episode, it's about uncontested investing specifically. Is there certain episodes that come to mind for me as the host for investors to go back and they can hear advice from investors in this industry? We have so many different professionals, right? So it's a valid question. We've run the gamut in terms of people that are in real estate that can help you succeed. But investors like hearing from investors. So I completely understand the conversation. And although it might seem a bit of a cop-out, the most recent episode that we published was from Brian Valdivia from Beltway Lending. But Brian is just a sharp guy. He has an impressive story, and he went at investing extremely aggressively, targeted a local market, as I mentioned, and just expanded from there. The answers that he gives are gold. I spent a lot of that episode just smiling, sitting across from him, because I was extremely happy with the advice that he was giving. It was actionable advice. It was actionable advice that can actually change an investor's career within weeks or months of implementing the strategies that he talked about on that episode. Some episodes are motivational in nature. Some serve different purposes, right? But Brian got right down to it and gave investors that are listening to the podcast advice that they can take with them. And, they're going to see direct results if they do what he talked about. So if you haven't yet, go listen to that episode. Brian Valdivia, just filled with nuggets of knowledge that all investors can benefit from. There are a few others that come to mind too. Back when I first started hosting in February and March of this year, you have Patrick Precourt, a Connecticut-based investor who not only had a strategy for investors, but the powerful mindset that Patrick has. He's parlayed that into being a mentor for so many in the industry, and he's also a coach as well. So if you're talking about needing motivation, inspiration, look no further than Patrick Precourt. That episode is chock full of that. And I left that episode changed, for the better. Just hearing about what he has to offer in terms of mindset, never getting too discouraged, actually training your mind in certain ways that just lead to success that are proven. It was really an eye-opening episode. So Patrick Precourt, check that one out. And then the last one that I'll leave you with is Tariq Turner. Tariq opens up about his personal life from a young age, some harrowing stories. And, it really opened his eyes to what real estate actually means. He doesn't take it for granted. So I think from a perspective aspect, if you want to watch that episode and really appreciate your real estate journey that much more as an investor, he does a great job kind of giving a message to people, again, putting things in perspective. It was a great listen. I still talk to Tariq to this day because I appreciated his perspective on not only the industry, but life. So that was a great episode and one that I have very fond memories of. I think with that question, we're ready to wrap it up today. I hope you guys really enjoyed this Q&A session. I know I did. I appreciate being able to sit across from someone, have a great interview, learn something new. But it's better to take the role on this occasion and try to teach you guys some new things. Hopefully these are, again, are actionable strategies and tactics, things that you can implement into your business, because times are going to change throughout the course of the next 3 to 6 months and then going into the rest of 2025, right? It's so good to be prepared, have plans in place, know what to expect. So that's what we tried to do today. Thank you to everybody that submitted questions. I really appreciate it. It made my job a lot easier today. So I hope you guys learned something new. We're going to go back to regularly scheduled programming throughout the rest of November and throughout the rest of 2024 with guests sitting across from me. But today, the Q&A session was a pleasure. Thank you to our faithful Uncontested Investing listeners. This is Nate Zielinski signing off. We'll see you all in the next one.
Thank you for listening to Uncontested Investing. Questions about today's episode or the podcast? Email podcast@rcncapital.com and make sure to follow REI Inc. magazine on LinkedIn and Facebook and RCN Capital on Instagram, LinkedIn, and Facebook. See you all next time.